This is 90.9 WBUR, Boston's NPR news station. Good morning, I'm Lisa Mullins. A subsidiary of Rhode Island-based Fleet Financial Group, one of the nation's largest financial firms and owner of New England's largest bank, is being charged with racial discrimination, loan sharking, and fraud. 6 lawsuits allege that Fleet Finance of Georgia conspired with independent mortgage brokers in a far-reaching home improvement second mortgage scam. Attorneys charge the operation earned huge profits for Fleet at a huge cost for thousands of low-income, mostly black homeowners who now face bankruptcy and foreclosure. In the first of 2 reports, WBUR's Bruce Gellerman has more on the investigation of Fleet Finance.
The storm windows rattle in Lily Mae Starr's home, Vinings, Georgia, whenever a freight train passes by. The tracks are about 100 yards away from the dilapidated 5-room brick house in a black enclave surrounded by an affluent white suburb just outside of Atlanta. The house was bought and paid for back in 1984 when Lily Mae Starr decided to have the storm windows installed to help keep her home warm in the winter. But now, because she bought the windows, she's afraid she'll soon be out in the cold anyway.
Yeah, I didn't know it was nothing, until, I got the windows. And they was $5,000 windows, but by the time they got through with the financing and all that stuff, it was $9,000. But I don't understand all that, interest and stuff that they got. In fact, I don't even know how much interest they charge, to tell you the truth.
An Atlanta finance company, Mortgage Makers, charged Lily Mae Starr 23% annual interest and $4,200 in upfront costs for a $5,000 loan, and used her home as collateral. She accepted the terms because she couldn't qualify for a conventional bank loan. Starr's monthly payments for her storm windows amounted to a quarter of her take-home pay as an iced tea packer. But her payments weren't made to Mortgage Makers, but to Fleet Finance of Georgia, a subsidiary of the Rhode Island-based Fleet Financial Group. Its Georgia operation purchased Starr's loan from the local mortgage broker. But after a few months, Starr couldn't afford to make the payments to Fleet.
So I got behind, and once you get behind, you can't work with them and say, let me pay what money I got till I catch it up, because they won't accept it. And they wouldn't accept it. They started harassing me and coming down, taking pictures, from standing outside and drive up in the truck. And, just open the door and take pictures and call me, writing, registered letters and all that stuff.
Fleet was preparing to foreclose, so Starr took out another loan with a different mortgage company, which doubled her monthly payment. She got behind again, and again she went to a mortgage company to refinance. Only this time, she asked that the new loan not be sold to Fleet. But the mortgage maker sold it to Fleet anyway, and Starr's monthly payments increased again.
Well, I knew it was a lot, but, I didn't want to lose my house. That was my main concern. I wanted to keep my house. It ain't much, but it's a roof over my head.
Starr declared bankruptcy. What started as a $5,000 loan for storm windows turned into a $60,000 mortgage that may cost her her house. Howard Rothbloom is a bankruptcy attorney in Marietta, handling Lily Mae Starr's case.
Fleet isn't just taking away houses, it's taking away homes.
Over the last year, attorney Rothbloom has seen what he says is a trend. More and more bankruptcy foreclosures involving loans purchased by Fleet Finance. Now he's handling 50 cases similar to Starr's.
It's significant that virtually every client that I have is religious as well. And these people are often grateful for the loan because no one else would give it to them. And when they have trouble paying it, they're less likely to cry out. Oftentimes they resort to prayer. And oftentimes they say to me, I think I should just let them take my house because I can't take it anymore.
Rothbloom has filed suit against Fleet Finance, charging the company with racketeering. He alleges Fleet used strong-arm tactics to collect on loans that violate Georgia's lending laws and permit interest rates of 5% a month. The upfront fees exceed the limit, says Rothbloom, but Fleet says since those fees were spread out over the lifetime of the loan, they're legal. John Stanford is Senior Vice President of Fleet Finance of Georgia.
The legal suits have no basis. We believe they are without merit, that we are on sound legal ground, and that we will prevail
Georgia that may ultimately involve more than 20,000 fleet customers who originally obtained their loans through unregulated mortgage companies. William Brennan is an attorney with the Atlanta Legal Aid Society.
Fleet has found a way to take these types of houses owned by, again, low and moderate income, often elderly, minority homeowners, and to make a fortune off those houses. They've turned these houses into cash machines, cash cows for making money. That's what's going on.
Brennan says homeowners in Atlanta had little choice when seeking loans. An investigation by the Atlanta Constitution found that Fleet did business with 7 major mortgage brokers. All of the brokers sold at least half of their loans to Fleet. 3 companies did more than 90% of their business with Fleet. Lawsuits in Georgia charged that Fleet Finance, operating through these brokers, discriminated against black homeowners, charging them higher fees and interest rates than white homeowners. Denise Dozier, a real estate agent in Decatur, says that's what happened to her. A mortgage company sold her loan to Fleet, and when her husband got cancer, they were unable to pay. Fleet foreclosed, and Dozier declared bankruptcy.
I think they targeted the area. I think if the truth be known, 2/3 of my neighbors have the same thing. We are in a middle-class, black, predominantly black area now. Fleet's being available to everybody. Nobody puts in for a loan with Fleet, but everybody ends up with the loan from Fleet.
Fleet officials say they used intermediary mortgage brokers because they didn't have the staff, expertise, or advertising to originate loans themselves. Earlier this month, Fleet announced it was getting out of the business of buying mortgages from high-interest brokers. Terry Franzine is Fleet Finance's attorney.
It's been a very gradual process. About 5 years ago, our senior management looked at the loans that we were buying and decided that there were some things about those loans which they didn't like, and at that point decided to gradually get out of the business of buying loans.
Fleet has also announced a 10-point program that places a moratorium on foreclosures. It promises to spend $8 million in Atlanta to help low-income neighborhoods affected by construction from the upcoming Olympics, and $30 million more nationwide to help reduce interest on what Fleet's John Stanforth calls burdensome loans. This looks like a settlement, this $38 million plan. Why settle now?
This plan is not a settlement. It does not compromise any of the rights of any of our customers in any lawsuits that they may be involved with against the company. It is a program which is designed to fulfill the needs of customers if, in fact, they have a situation which is addressed by one of the points of the program.
But Bruce Marks of the Union Neighborhood Assistance Corporation in Boston says Fleet only announced the plan after the CBS program 60 Minutes began looking into the company. Marks, formerly with the Federal Reserve Bank in New York, spent 2 years investigating a second mortgage scandal in Massachusetts and has now set up offices in Georgia to investigate there. Mark's team of researchers found that Boston banks, including Fleet, were buying loans through mortgage brokers who bankrolled unscrupulous home repair companies that targeted low-income homeowners in minority areas.
There are cases where they have given loans to people where the person's been blind for vinyl siding, and they do like 1/10 of the work because obviously the person can't see it. There are cases where people are in wheelchairs and they build a porch that's 8 feet off the ground. The person can't get to it.
The Federal Reserve Bank of Boston investigated the charges. In separate reports, it found that area banks were redlining minority areas, and that virtually all Boston banks were involved in the high-interest rate home improvement loan scandal. Fleet acknowledged its role in the Boston scam and signed an agreement with the state pledging $23 million to settle claims and prevent further litigation. But critics questioned the timing of the settlement. It came as Fleet's holding company in Rhode Island was taking over the failed Bank of New England. The purchase was an emergency takeover, and federal regulators say they didn't have the time to fully investigate Fleet's subsidiaries. That is, until last month, when the Federal Reserve completed a more exhaustive examination of Fleet's mortgage lending practices. William Dunham, general counsel of the Boston Federal Reserve, says they tried to understand Fleet's connection to the high-interest mortgage lenders in Georgia, but couldn't. The reason? Fleet's records were a mess, deficient in critical areas.
What kind of deficiencies? Well, poor documentation and inadequate review of the loan process and failure to document relationships with third-party lenders and things of that nature.
So you have no idea basically what the relationship between Fleet Finance and these third-party lenders was based upon the information you were providing.
That's essentially correct, that the information systems in existence were inadequate for us to draw conclusions about those relationships.
None of the 7 major mortgage brokers in Atlanta that did business with Fleet or their trade association would comment about the broker's relationship with Fleet. The Fleet Finance attorney, Terry Francine, says the mortgage brokers were free to sell their loans to anyone, and describes Fleet's relationship to the brokers this way.
We had a contractual relationship with them whereby we would agree to buy certain loans which they originated.
So it was pre-approved?
Some of the loans would be pre-approved prior to closing, and some loans we would buy in bulk after closing.
But attorney Bill Brennan charges the 7 Atlanta mortgage brokers were little more than a front for Fleet, using the unregulated brokers to market aggressively high-interest rate loans in minority areas.
They're employees of Fleet. They're agents of Fleet. They're out there doing Fleet's business. And what's Fleet's business? Getting mortgages on these types of homes.
One of the brokers that arranged loans for the mortgage companies was Pastor Craig Soares of Atlanta. Soares says he helped people get loans who were denied credit by banks. He himself had one through Fleet to fix up his church, but fell behind on the payments and had to declare bankruptcy. Soares charged that there's a direct link between the mortgage brokers he worked for in Georgia and Fleet Finance of Rhode Island.
The cash comes from the bank in Providence, Rhode Island. It's wire transfer. It's put into escrow account of the closing attorney before deals can be finalized. The money has to be in place from Fleet. I've heard it sitting in a closing, on my way to closing. I've heard it said many times that, well, we can't fund a loan until the wire comes in from Providence. So Fleet has knowledge of these deals from the front. Before the transfer and assignment is done on paper, Fleet is behind the deal.
A jury trial into the mortgage discrimination allegations against Fleet is set to begin soon. The Georgia Office of Consumer Affairs has launched an investigation, and the Federal Reserve Banks of Georgia and Boston are expected to issue the result of a follow-up examination into Fleet's lending practices next month. For WBUR, this is Bruce Kellerman.
Our story on Fleet Finance was produced with the help of George Prince in Boston and Ed Hula in Atlanta. Tomorrow, we examine allegations the company engaged in fraud and used loan shark tactics to collect its debts. This is 90.9 WBUR, Boston's NPR news station. Good morning, I'm Lisa Mullins. A subsidiary of Rhode Island-based Fleet Finance Group has denied charges it was involved in a high-interest loan scandal. Fleet Finance of Georgia faces 6 lawsuits which claim it made fraudulent loans, discriminated against minority homeowners, and used strong-arm tactics to collect when it foreclosed on people who couldn't pay. In the second of our 2-part series, WBUR's Bruce Kellerman examines the allegations against Fleet.
In 1983, Georgia lifted the cap on interest rates, allowing financial companies to charge up to 5% a month for their loans. At the time, Fleet Finance of Georgia was making mostly small consumer loans, but then it began buying up second mortgages made by independent brokers who often charged 20% or more in annual interest and 30 points in upfront loan acquisition fees. Business boomed. In 1983, Fleet made 154 of these home equity loans. In 1990, it bought more than 8,000. William Brennan, an attorney with Atlanta's Legal Aid Society, is one of the lawyers now suing Fleet. Brennan alleges that Fleet targeted minority borrowers and charged them upfront costs that exceeded the monthly usury limit.
It's like strip mining. They have found a tremendous amount of money in these houses, and they're the first ones in a very big way who have found a system for accessing the equity in those homes for themselves to make a great deal of money.
Fleet says it operated independently of the high-interest lenders from whom it bought loans. And officials say that since the upfront costs were spread out over the term of the loans, they were legal. An Augusta court has agreed with Fleet, and the matter is now on appeal. But in the late 1980s, when the Georgia economy soured and real estate values plummeted, many of the homeowners who were once able to afford their high-interest rate loans fell behind in their payments, and Fleet began foreclosing. An analysis by the Atlanta Constitution reveals that over the past year, Fleet filed 7 times more second mortgage foreclosures in the Atlanta area than the next biggest lender. Fleet attorney Terry Francine.
I mean, it's not like we're just a little bit bigger than the next guy. We are twice as big as the next guy, so it doesn't surprise me that we would have more foreclosure notices than another lender might.
Francine says Fleet's foreclosure rate is below the national average. But in sworn court testimony, Fleet's Executive Vice President, E. David Scruggs, says Fleet has no readily available means to determine its foreclosure rate. Now Barry Reed, Executive Director of Georgia's Consumer Affairs Office, is investigating allegations Fleet was involved in illegal activity when it made and foreclosed on the loan.
And I must say that the allegations that we're looking at are among the most serious allegations on the part of consumers that I have witnessed in my 16 years here in the Office of Consumer Affairs.
Atlanta attorney Howard Rothbloom represents 50 people now suing Fleet. Rothbloom says the allegations go far beyond the issue of whether Fleet charged excessive interest.
There are improprieties in the origination and the collection of virtually every one of these loans that I have seen.
Rothbloom opens up a file to demonstrate what he means.
I have a copy here of a blank loan application which has been signed. Oftentimes when homeowners apply for loans, loan applications and other documents are filled out or are signed in blank and filled out at a later time.
Rothbloom charges that the second mortgage companies that sold loans to Fleet would fill in false information about employment, credit, and income. Fleet attorney Terry Francine defends Fleet's handling of the loan application.
We are dependent upon the lender from whom we purchased the loan. It's up to that lender to verify the information which the customer gives. If it turns out that the information which the lender gave to us about that particular loan is incorrect, then we request that that lender repurchase the loan pursuant to the terms of our agreement.
But one former mortgage broker who sold loans to Fleet says Fleet didn't investigate the loans it bought. Craig Soares is a pastor in Atlanta who once worked as a loan broker.
The master broker's job was to get, to cover the tracks for Fleet. Anything they had to do, any kind of paperwork, if there wasn't any tax returns in the file, it'd be very common to hear the master broker tell a broker, do whatever you have to do, just make sure all the paperwork looks right in the file before I take this thing up there. It was very common for somebody to sit to a typewriter or make up tax returns. You don't have to file them. Nobody took a seat at your file. Just have a 1099 or 1040. Just throw it in the file.
Attorney Howard Rothbloom says he wanted to find out how accurate Fleet's records were of one of his clients.
So I went with the client to a Fleet Finance Center and asked for a loan history. And they said that they couldn't give me one, but they let me look at one, and it was a loan history which was made up of 4 pieces of notebook paper with scribble on them.
The Federal Reserve Bank of Boston also investigated Fleet Finance's records a year ago when its Rhode Island holding company was taking over the failed Bank of New England. William Dunna, general counsel for the Reserve Bank, says federal officials also had trouble with Fleet's records.
The documentation was clearly inadequate for us to make determinations as to the relationships with third-party lenders, and there was inadequate documentation to determine what third-party lenders were actually doing out in the field.
But the Reserve Bank's investigation found no obvious cases of fraud. The finding is noteworthy because 2 years ago, there were similar allegations about loan fraud in Massachusetts, involving virtually every bank in Boston, including Fleet. Back then, William Spring, Vice President of Community Affairs at the Federal Reserve, explained why banks had trouble detecting false information loan brokers were providing.
That is very hard for a bank to see behind unless there's consumer complaints, the Attorney General. Somebody could have raised an issue then, because we're talking about potentially crime here.
Fleet acknowledged its role in what had become known as the second mortgage scandal and agreed to pay Massachusetts $23 million to put an end to further investigations. And earlier this month, Fleet Finance of Georgia announced a program that places a moratorium on foreclosures there and a $38 million plan that includes money to help people with burdensome loans. One-time Atlanta broker, Pastor Craig Soares, says one of those loans is his. He borrowed money to fix up his church, but when he fell behind on the payments, Fleet tried to collect.
They would not accept any partial payment. And this is standard for Fleet. Anyone that has done business with them that gets behind, even if it's a month, when they tap on attorney fees and late fees, if you can't come with the whole amount, forget it. They'll just tell you, pack your boxes, we're coming to take pictures, and we're advertising your property.
Our collection techniques are no different than any other lenders.
Fleet Finance attorney Terry
telephone its customers who are delinquent in a payment, will treat those customers in a very business-like manner, politely, and ask them to make the payment. Our first concern is for the customer, and we want to find out why the customer has not made the payment. If the customer has a problem making the payment that month because of illness or, any number of reasons, then Fleet will work with that customer and either defer the payment or reduce the amount of the monthly payment, but do something so that that customer can live up to his obligations under the loan document.
So, all these charges, is it just a lot of smoke?
In our opinion, it is.
The collection tactics of Fleet are abusive.
Atlanta attorney Howard Rothbloom charges Fleet used strong-arm collection tactics and violated Georgia's anti-racketeering laws. Annie and Louis Shields are clients of Rothbloom's. He says they couldn't afford groceries and fell behind on their loan payments. A Fleet collection agent called their home.
Annie Shields answered the phone, and the person on the other line said that he wanted to speak to Mr. Shields. And she says, he's sleeping.
Annie Shields recorded the call by a man who identifies himself as Mr. Davis from Fleet Finance. We're not permitted by law to broadcast that tape, but in the recording, Annie Shields repeatedly pleads with Mr. Davis, saying they don't have any money. Her husband is terminally ill.
And then he asks her, in a very intimidating tone, of course, what she intends to do about paying her Fleet mortgage. And she said to him that Louis Shields does not have any money.
Fleet's efforts didn't end there. Records show the company contacted the Shields church, asking it to pay the money the Shields owed. Fleet Finance officials declined to comment on individual cases. Atlanta legal aid attorney William Brennan says the Shields loan was just one of more than 20,000 Fleet Finance bought through unregulated mortgage brokers. Fleet would then buy the loans and sell them as securities backed by mortgages to large investors and pension funds.
They're making millions, if not billions, on this side with the securitizing the mortgages. That's where they're making a real intensive profit.
Fleet Finance's holding company in Rhode Island recently filed what's called an 8K. It's an announcement required by the Securities and Exchange Commission. In it, Fleet advised investors of the Georgia lawsuits and says its program to help those with burdensome loans will cost the company $25 million. Fleet also tells investors that it believes its lending practices conform to the law. The Boston and Georgia Federal Reserve Banks are now investigating Fleet again. But Bruce Marks of the Union Neighborhood Assistance Corporation in Boston, who spent 2 years uncovering the second mortgage scandal here and has set up offices in Georgia, says the Federal Reserve should do more than investigate Fleet. He wants the government to undo Fleet's takeover of the failed Bank of New England.
The fact of the matter is, when they purchased the Bank of New England, they did it with blood money, because they did it off of the backs of long-term homeowners who struggled to keep their homes and to stabilize their communities. Well, they have to make a restitution that's going to cost Fleet conservatively $3 billion. Conservatively. And the fact of the matter is that there is a good likelihood that Fleet will go insolvent.
Marks is now investigating other financial companies in Georgia and Florida, alleging they were involved in the same lending practices as Fleet Finance. For WBUR, this is Bruce Gellerman.